The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruits Stock Club. Man, welcome to another episode of First Fruit Stock Club. Hope everyone's having a great week. Man, I can't complain. Life is good. But you know, recently, my family and I, we decided to get back in shape. Right, get back in shape as a family. And yes, I have a little small gym in my house. In my basement in Columbia, small workout area. But before the pandemic, man, I was a member, a long-time member of the Columbia Association gym. I know everybody, you know, is the Columbia in this area. It's the Columbia Association, and then it's Lifetime. And Lifetime is the brand, is the higher end brand. But I've always been in the Columbia Association. And even when I, graduated, I came back and, that's where I always worked out. But often I worked out, during the school year. I played football in college, Cheney University, CU. Unfortunately, we do not have a football team right now, but we did have a football team at the time. And this is where I worked out and, where I was able to, bulk up, from a freshman to a senior. You gain a lot of weight, especially playing sports, especially, eating in college cafeteria. You'll gain a lot of weight. But the reason why I was so the Columbia Association here in Columbia has basically a bunch of different locations. And so we were going around visiting the location. And also my boys, they're playing basketball. So they have gyms, open gyms here. So we're going to different locations. And there's one Columbia Association, the Columbia Gym. I think it's the Columbia Gym. Well, anyway, we were just going around the gym and they had a group of women, right? Women, 40s, 50s. And what they were doing is they were doing double dutch, right? And my wife, my wife loves the double dutch. She doesn't do it often, right? But she loves a double dutch. So, man, I was thinking about, and this happened a little while back, and I was thinking about what presentation, what message I was going to discuss today. And today it's about, man, using double dutch to get into the market. Right? Using a successful double dutch to get into the market. I'm gonna give you a strategy of how to get great entries into the stock market because, like I said, the theme today and the market is is moving right now. Last week was the rise of the bull. I think we've entered a new bull market. I think the market will continue to rise. We'll have pullbacks, and we actually had a small pullback a few days ago, but man, the market shrugged that off, and the pullback, the information that was circulated last time was was really we had a large pullback was part of the downturn in the market, but the market just shrugged that off like it was nothing. So I can't definitely can't tell the future, but I really do think that and I went through a framework last week. So if you haven't had a chance, listen to last week's podcast or YouTube show about why, how to identify a bull market and how to identify early on so you're not stuck behind and say, man, I should have got in there. I should have got in there. So this week we're going to discuss entries. All right, we're going to discuss entries, how to decide on getting the entries and give you some strategy of getting in, trying to find great entries into stocks. Right, whether you're buying long term, whether you're options, and dividends, it really doesn't, not really worried about entries as much. But those two probably more in focus of this week's show. So let me just get into it. So before I get into the show, I just want you to ask you to like, subscribe, and share. Please like, subscribe, and share. I'm trying to grow my message. It's a positive message, and I'm here to help people grow their wealth, um, and teach, and also pass down skills excuse me, that you can hand down to your kids. It's real important. This is a real important skill, how to manage your money and how to invest in the stock market. So I think it's real important. So let me get into the disclaimer. All right. The information provided in the First Fruit Stock Club podcast is for education and information purposes only and should not be considered financial investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including potential loss of principal. Past performance is not indicative of future results. Always conduct your own research, consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Right? So the First Fruit Stock Club, the basis is about helping people build wealth and helping people um, live and give out of their brokerage account. That's the goal, teaching people how to invest, how to begin, and letting people know that you can do it, right? And even if you do have a financial advisor, you should have a small portfolio that you're managing just for the fact of you want to pass the skill set down to your kids. It's real important. All right. So let's get into the double dutch, man. As I was telling the story, and then I double dutching, but this is the closest I could get to the picture. But this is the double dutch. If you don't know what it is when three people, and it's usually done with two ropes. All right, and basically you have two people, using the rope, and 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 then you have one person trying to enter into while the ropes are moving. All right, and so, man, I thought this was a great analogy of the market right now and how should we enter the market. So, so double dutch your stock entries. All right. So timing the market with rhythm, not emotion. Okay. And of course, by Donald Green. And I am the founder of the First Fruit Stock Club. So the stock market, the big idea is the stock market is double dutch. And when 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 my wife was doing double dutch while we were at the gym, she I was examining because I've I've seen it. I've definitely never done it, but it just looks really hard, right? It looks like it's like the timing of it has to be just right. Otherwise, you get banged in the head or a trip and fall or whatever. So therefore, you have to be able to manage. So one thing is that you don't want to be too early, right? And one thing my wife was doing was she was just like Tom. She was like going with the rhythm of the ropes. She was looking at the rhythm of the ropes when she was counting. And then finally, when she got the rhythm, she jumped in there, right? And the thing about the first time, because she hadn't done it in a while, she was too late, right? So she's too late and got hit with the ropes, and the ropes, they had to start over again, right? So and I think one thing she hesitated, right? Because she hadn't done it in a long time. She hesitated and getting in. So one thing you have to do is you don't want to be too early, you don't want to be too late, and then you cannot hesitate. All right. Not too early, not too late. You can't hesitate. In a market like this, the way the market is, you just have to get in and invest, right? Of course, you need a strategy, you need a formula of doing things, but we can discuss that later. But this is one of those markets that's going to move. Um, and this is why people lose, right? And one thing definitely she was really focused on the ropes, right? She was watching the ropes, she was making sure what was going on, and what happens is sometimes people jump in without watching. They chase instead of timing. You have to time it. You have to wait for their pullbacks into the market and position the stocks. And but you can't hesitate. And then once you get in, and I'm tell you, she was doing a double dutch, and I don't you're inside, you got the two ropes, and you got the rhythm, and you keep going, but she was very confident while she was in the ropes, in between the ropes, and doing a double dutch. She was very confident, and when she was in there, once she finally got the rhythm, once she decided to go in, and she did not panic, and I would have panicked. I'm like, man, I've just one false step, and I'm out. She didn't panic, right? She didn't panic. Once she got in there, she got her rhythm, and she was moving, and she was double dutching. All right. So the framework, 3 steps to master entry timing. What we talked about, you have to watch the rhythm. Got to watch the rhythm. She was watching the rhythm of the ropes. You got to watch the rhythm. The second one is you got to time your entry. She was timing. She was looking at the timing. She was making sure that the ropes were moving correctly. She was counting. She was doing whatever she was doing. I probably need to ask her what was going on in her head. But she was doing these particular things. And then once she committed, she was in. She was in it, and she was doing it, and she was successful, right? She was successful. So, man, and the stocks is a little bit different, and jumping rope, right? So we have to be able to identify the trend. The market, with 3 months into the year, and the market really has identified a few trends for us. I mean, AI is still a trend, but it's been more storage, it's been more energy, right? Even though we had a little run in the Mag 7, they're not running like they've done in the past. So AI's actually moved to the next phase, right? So you really want to focus on the trend right now. And those are the trends that I'm saying. And then you confirm the trend with volume. Remember, we discuss volume in the market. The volume tells you if people are really interested in putting their money to work. It tells you that how many transactions are going on, right? Are people buying and selling? Is it active? Are people interested in the market? When the volume is low, people aren't interested, right? In the market, the volume has been increasing, right? The volume has been increasing in the market. And I've done that in the past where I have, always going to the volume of the market. All right, next one is what the rhythm looks like. As I was saying, my wife, she was counting the ropes, she was doing a rhythm, right? And in the stock market, the rhythm is, and I discussed this last week, is higher highs and higher lows, right? We don't want to test. The market's a time machine. All right, market's a time machine, and what happens is it will go back, it will discount backwards, and it will compound forward. And if it's positive, the news is positive, and most of the time, 70% of the time, the stock market goes up. And most people think about it. If you think about that in a simplistic way, most people want their investments to go up and not down, right? Most people want them to go up. So higher highs, right? That means more people are feeling confident, they're not selling their stock, and they continue to buy and increase their positions that they're having. Control pullback. That's what we just recently had. We had a control pullback on some news about AI and maybe the spending is. And what we just found out with the report of the Mag 7 is that the spending is crazy, right? Spending is crazy, and it's continuing, and it's not stopping, right? and stronger moves with volume. Man, those sectors that I talk about, storage devices, storage and in general, energy, like they're really moving the market, and the volume is a testament. The increased volume is a testament that these sectors of the stock market are where it is right now. All right. Time your entry, right? And that's what I said, too early, right? That's where a lot of risk is, right? Too late, then you're chasing. And timing the open, trying to get there just in time. And timing takes um timing it take it takes time. You have to follow the market, right? You have to follow the market, you have to be in tune with the market, right? And the market may not be something that you want to watch all the time. And of course, got a pitch. That's why you should join the club. But time in the opening, right? And you have to time the opening. And a lot of times the best entries is when people when it's just like at the beginning where it's getting ready to turn, but it hasn't fully turned yet. And all the positive news is trying to get there and trying to get there early. Now you can wait later for confirmation, right? Confirmation for a move. The stock has moved to a new high, but sometimes when you do that, you miss out on a large part of the rally. But I think finding a position, a place, and where his family starts to turn, the stock starts to turn up, and towards a level that maybe it had some positive upward movement, but still moved down. And if you can do it and it pass a certain level, then you can find a good opening in that way. All right. Um, Entry opportunities, man. Um, it's a lot of stocks out there. Um, I've been and we've had some club members hit some 100% opportunities in the club. But one of the ways to get entries, right, to get a good entry is, wait for a pullback. But we're waiting for the pullback for the right stock. Now I haven't hit on everything, right? I have some stuff that's still pending, but I've hit a lot, right? Especially on this last pullback where I was telling everybody, continue to invest in the market, keep buying. This is a great opportunity. Even though we had the issue with Iran, it was still the market will discount, and then it will find its footing. And once it finds its footing, then we'll be on to the races. And that's what happened. Breakout with volume, you know, looking for stocks to break out that have higher volume days. We don't want light volume. Um, and then we want, like I was just discussing, we want to retest the level. We want to find a level that maybe it couldn't hold, and it started going back down after it touched the level. We want to retest, right, of the level. Or we can buy in between the retest and the movement starting to go up. And that's a little bit riskier, but if you like, look, I don't want to risk, I wanted more confirmation, you can buy during a retest of a particular level. Man, stick to your plan. Sure, you should have a plan in the beginning when you're starting out investing and you're trying to find. You don't want to second guess your plan and let the trade work. Sometimes, I've had some trades like at the beginning we were trading oil, right? And oil 150, 100% right off the bat. Now we have some other trades in that we've been in that's taking a little bit longer. And that's what happens. Some trades take a little bit longer than others. Some trades are hit off the back, depending on what's going on in the market. But it's important that we continue that you continue and not second guess. Do the research, and you just got to hold strong for a little while. All right. Fear makes you late. All right. You can't be fearful. You got to step in there and take a chance. Take some risk. Right? And greed, FOMO, fear of missing out, makes you chase. Right? You see other people posting online. Man, it will make you chase the market. And look, I'm not immune to that. I'm trying to find out. I'm looking at a couple of stocks, couple of entries right now, and a couple of stocks right now that I'm going to give to the club. And I'm trying to decide, am I chasing or is it an opportunity? Right. So sometimes that is a hard line to find. Right. Are you being greedy? Are you chasing? Or are you can you enter a new entry? And sometimes you can say, well, it's already, the stock's already moved up so far, but that doesn't mean it's going to move up, it's not going to move up further. Especially when you've done your research and you see the trend that's going on. And what happens is everything else isn't going to work. Now, there's some other trends going on that I'll be taking to the club that we're going to discuss. And that's these things will affect the market in the next few months. But for right now, the trends are working, right? And having discipline, not chasing everything, looking at things that make sense, and staying with everything. Having discipline does work. Okay. So, execution rules define entry before buying, right? We have to know before we start to buy. We need to define an entry price. That means a retest. That means a turnaround from. That means you're looking at a pattern, a cup with handle. You're looking at all those different things. Is it a shakeout right now? And the shakeout could reverse. Like you have all those different things that could go on that you need to define before you get. And then you have to define the exit. And this is one of the hardest things. It's running 100, 200%. Like, do you continue to let it run, or it's some stocks that have been running since the beginning of since last year? It's like, and if you're sold, and I sold, I had a nice micron option, and I sold it. I took, went up 100%. I was like, I think I'm gonna take my money here. Um, but man, I could have gone up another 100, but it could also go up down 50%. So you have to be on both ends of it. So you have to define the exit also, right? Define the entry, and then you have to know where you think you'll be comfortable in getting out. And then one thing you can do is, different strategies that I just introduced to the club is that, making sure that you have more than one contract, so you don't have to sell the entire all your contracts. You can sell half of it, right? And it's a strategy, that that I used in real estate. You buy two properties, sell one, pay off the mortgage and the other. But stock wise, you can sell a portion of the contract, and then you have the other contract for free, right? Because you got all your money back, and then you have the other. So then you can let it run, or you can take all your money off the table. That's really up to you of what you decide, and then you have to accept the risk. The risk is that the option goes bad, or the long term buy goes bad, and the stock goes down 20, 30%, right? That's the risk. And we have to accept the risk in investing. Investing isn't all the way up, right? Investing isn't all the way up. It does have its drawbacks, and stocks can move downward. All right. So you have to accept the risk. All right. So, man, so the formula that I'm gonna give you, right, is rhythm. Gotta have rhythm, gotta know the rhythm of the market, meaning what cycle are we in, right? How the stocks are moving, stock market, and I mean, is it in pullback territory, or is it are we going to continue to go higher? I think we continue to go higher. Like I said, the beginning is up, up and away. That means I think the market is going to continue to go, and we have entered into a bull market. And then last week, like I said, last week, I discussed all that in the show and how to identify, and every point we hit checked off on the box. All right. Timing and knowing when to jump in there. Like I was just discussing the story with my wife doing double dutch. Man, she first time she hadn't done it in a while, and time was a little off. But once she got her timing together, she got in there and she was getting busy. And then you just gotta execute. You gotta jump in there. She jumped in there. You gotta buy, you can't sit on the sideline. You gotta put money aside. and you got to put your money into the market and let the money work, right? Man, and this I say, stock market is just like double dutch. Most people lose because they don't understand the rhythm. Got to understand the rhythm of the market, right? And if you want to understand the rhythm of the market, you don't. All right. Join the First Fruit Stock Club, right? Learn to identify the rhythm and execute with confidence, right? Execute with confidence. And what we do is we do options, dividends, and long-term investing. And by understanding, by creating portfolio and having a system, you are able to get the rhythm of the market. People who've done really well in the club, and we're continuing to grow their portfolios. They have a strategy that's really simple, really easy for them to follow. And if you need that, if you're interested in that, man, join the club. All right. And so until next time, right? Until next time, everybody, thank you for joining me. Be
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go. Thank you.